Hello everyone and welcome to Day Trader S&P 500. Today is Saturday, October 2nd. Yeah, I usually make these on Sundays, but I was so excited I couldn't wait, and so we're putting out the weekly on Saturday. That is the year 2021. This is Dale Woodson, editor of Woodson Wave Report. We're going to cover the S&P, the Dow, the Nasdaq, the Qs, Tesla, gold, and the US 10-year. A lot to cover. Important week coming up. They're all important, it seems lately, but this one is extremely important for what's coming up. We'll get into those details. First of all, let's look at the S&P. We're looking at a 1-hour chart. This is the September 2nd all-time high. You can see we've got a 1 down, a 2 up, a 3 down, a 4 up, and a 5 down for the first wave of a larger degree. And let's look at this. You can see the wave 1 low here. And the wave 4 high holds below the wave 4 1. That's the markets are doing this a lot at various degrees of trend. Okay, so anyway, we've got a 1 down into the September 20th low, and then a 2 up into the September 23rd low, a high. I'm sorry, which was right on a turn date. Let me see real quick what that Fibonacci retracement is on there, or was, should I say. I think it was, yeah, right near the 618 right there. You see it hovered around there and then and said see ya and went down. Okay, let's remove that. Okay, so for the third wave, this is with the circle around it, we call that the minute degree. Okay, in minute degree we have 1 down, 2 up. There is obviously where 3 gains equality with 1. I think it's 42.25. I may be off by a point or two. And you can see the 1618 down there, 40.79. We'll get into more detail with that. But then you see we also have a 1, 2, 3, 4, 5. So this is a 1 of 1 less degree, even though I don't have it marked over here. That would be minuet degree. Okay, we start with minute, we go to minuet, and 1 smaller is subminuet, and we go higher too. So it looks like this is forming a 1 of 3. There's a 1, 2, and a 1, 2. Okay, and this 2, as you can see, so far has gone near the 50% retrace. We could allow for a move up to the 43.98, which is the 618. Of course, 2 up cannot retrace more than 100% of 1. So the make or break for this 1 and 2 up is this high right here on September 23rd, which is 44.65. Let me see if I have that on one of our S&P, not that one. We'll get to that later. We can do this now. Yeah, this shows it all. Okay, this is a series of 1s and 2s. We have a 1 here with the circle, a 2, and then 1 of 3. And then 2 of 3 right here. Okay, it's at 43.75. The Fibonacci 50% is 43.76, and the 618 is 43.97. There is that make or break for this wave 2 up right here, that 44.65 that we just talked about. So we have a series of 1s and 2s developing at least 2, if not 3 different degrees of trend. Okay, there's 1, there's 2. Our 3 targets, okay, here again, that's where 3 equals 1 at 42.97. And I list all these different multiples because 3s are the most powerful and strongest waves, especially in declines, bear market declines, and they can take on any Fibonacci multiple they choose. Normally it's not a 1 or a 1618. It's usually a 2, 618, or 3, even 4. So there are those targets there. The 3840 is 2618. 3601 is 3618. Okay, we have our turn dates here. You can see them up here. There was a 923. Well, the other ones hit. I got them in red here. The 97, 910, 915, 923. And the next one is 106, which is this coming Wednesday. So ideally, in the perfect Fibonacci world of time and price, this wave 2 continues up into Wednesday and either hits the 618 or holds this 44.65 high. Okay, I think we'll come back to this. And then we've got the 55 days, 1027. That's where we're looking at, and we have a spiral there. We'll look at the other time spiral that identifies 1022. That could be a low of 3 or the low of 5. We would expect 3 waves up here and then 5 waves down into our target date. I have another chart that I'll show you that gets into more detail and combines 2 or 3 Fibonacci spirals, which we wanted to get to. I think this is the chart here. Yeah, this is the 5-minute, but it's the same thing as that 10-minute. So let me get to that other S&P chart. Well, I have it here. Okay, that is that one. And here, this one, it's a lot of information. I've got 3 different time spirals here, using them all together. So I wanted to put them all. It's a little bit crowded, but bear with me if you will. This one here from the March 4 low in black, this is the most important because it's the first time that I started. I've been doing these spirals since 1999. That I started one from a low. I always in years past started them from a high, looking for the 55-day low to find the low and to trade into it, and then cover our positions, our short positions at that time. But this one I started from a high, and its accuracy is simply unbelievable. It's only missed 1 minute. That high tick at the open on April 29th was higher than the 28th close. Other than that, through the July 26th high over here in black, it has a slippage of 1 minute, and its accuracy is 99.59s accurate. The next turn date in that sequence is the 23rd. Okay, we'll get to what will work and what won't work, but that's a key date. And that's why I had that that time range from the 22nd to the 27th, because the 23rd, I believe, is a Saturday. There it is there, just to make sure. Okay, so this one moving up has caught all the turns, and the next one is the 23rd. Okay, the one in the purple is from the all-time high, and this is one I'm used to doing for, 25, 30 years, whatever. And this is catching those turns, alternating highs and lows. And the next turn date in that sequence is October 27th, thus that time frame. But the key one is the 34-day, the 8, where did it go? From the all-time high. Here it is, sorry, the 10-6 turn date. Let me get back to this other chart, if you will. Okay, there we go. Okay, if this is going to fail, that's what we always got to ask ourselves. Where are we wrong? Okay, and that's how you have make or break points, and that's how you don't lose 100%. You got to know where you're wrong. Okay, well, where we're wrong here is this 2 up. If it goes above this number right here, it can't be a 2 because it would retrace all of 1. Okay, there is 1. With the parentheses, there is 2. So that's our make or break. So our make or break price, and we've got our time right here. This is the 34-day spiral right here. I can tell you from doing these, if it's going to break, it's going to break on the 34. Okay, so we have our price and we have our time. It's coming up on Wednesday. If this market goes up through Wednesday and it goes up above this 44.65 high, you can forget all this. Okay, it's wiped out. While it's possible, it's highly, highly unlikely. That's why this week is so important. What's going to happen here? It could just fall from right here. It's got a perfect 50% retracement and go down from there. And then that turn date could have a little bit of slippage in it, which to date it has none. Okay, so we'll see if this goes up into Wednesday. But that's it right there. Okay, so that's where they usually break. When they go wrong is at the 34-day. Of course, the 55-day always marks the low. There's no guarantee that there'll be a panic spike crash low, but if one is to occur, and they're very rare, then that's the date it's most likely to happen, into that 1022 to 1027 time range. At the minimum, as long as this 34-day and this wave 2 high hold, it should mark a low. Okay, so it's basically three weeks of down, but it's not going to go straight down. There'll be rip your face off counter trend rallies and huge moves down, especially if it hits one of these targets. But that's what we're looking at. So we're really keying in on October 6th and 44.65. Then if those hold, then these are in play. Okay, hope I made that clear. That's why exciting times. We'll see what happens on that. I think that's it on the S&P. Got a lot more to cover. Let me see if I had anything else. Yeah, I had all this in here. Just want to show you guys there's 3 different spirals that are in play. We talked in detail about these 2. And this one from 7.6, that was at the expanding flat way back when, expanded flat up here. And this has a pretty good success ratio, but not near what these other 2 have, the one in the black and the one in the purple. But this one is... It had the 10-3 turn date. That's why I wanted to mark that. So that it's a Sunday. So either turned on 10-1, which was the low Friday, or it will turn Monday. That's right in there with that 10-3 to 10-6 time frame. It looks like 10-3 or 10-1 in actuality on Friday marked a low, and 10-6 ideally marks a high. We'll see how that plays out. That's why we're in a critical time period in that 10-1 to 10-6 time frame. 1 is a low so far, and we'll see if 6 marks a high. Okay, let's move on. Let's see what else we have here. The Dow. The Dow topped back in August the 16th. We have a 1 down, a 2 up, and we've got another 1 and 2. I got marked here 3 degrees of trend. A 1, 2, and a 1, 2, and a 1, 2. Okay, I think I got a picture of that. The most latest 5, you can see a clear 5 waves here. Okay, from the September 27th high until Friday's October 1st low. 1, 2, 3, 4, 5. There's a retracement. So this index could be looking at wave 3 of 3 of 3. If you think wave 3 of 3 is strong and powerful, wave 3 of 3 of 3 is about as strong and powerful as you can get. This could still go higher. It could go up to the 618 at 34,576. It cannot go over 35,066. That's the same make or break that we just saw in the S&P, that second wave. Let me see if I have that Dow here. Yes, I do. Here we go, and we got the numbers to go along with it. There is the 1, 2, and there is the 1, 2, and there is the 1, 2. You can see 3 different degrees of trend. Larger degree, smaller degree, and even smaller. There's that wave 2 at 34,490. The 618 is 34,576. And here's that same make or break that we saw on the 10-6 date with the S&P, at least as far as price. That is right here. Another thing it could do is make a bigger 2. This could be A up, B down, and C up. So just because this breaks this high doesn't mean the whole count is dead. It just means the last part of it is dead. This 1 down and that 2 up. 2 up cannot go above the start of 1 right here. Here's our targets for this wave 3 here. Okay, we've got a 1 and a 2. So this wave 3 that began here and ended here, that's 1 of 3. This 3 equals 1 at 33,160 and a 1.618 at 31,983. Okay, that covers the Dow. Let's look at the Nasdaq. Nasdaq topped on 9/7. All these have different dates, and like I've said for months now, historically these markets don't all top at the same time. Typically they're different, and the Nasdaq in this case topped later, and the Dow topped earlier, and the S&P topped on the 7th. By the way, the Russell topped in March or April, but that's another story for another day. Okay, we have a clear 5 waves down here. Again, look at the dotted line. You can see the wave 1 low and the wave 4 high. Like I noted before, 4 cannot go into the price territory of 1, or in simpler terms, the high of 4 cannot go higher than the low of 1. It's go right up against it and didn't break it. And then we have a 5. That's 1 down. You can see the retracement here for 2 right at the 618. And then we have another 5 waves down developing. Okay, we got a 1, 2, 1, 2, 3, 4, 5, 6. That's 9. Another way to count them is 5, 9, 13, 17. Those are all impulsive waves, which are waves in the direction of the main trend. I can count 9 down here. So this is a 1 of the next degree. Let's get that retracement of that. We'll put that in and then move the other ones out of the way, okay? This is the next degree of trend. Let's move these guys for you guys. Remove. There we go. So we got a 1, 2, and then a 1, and there's 2. It's only at the 382. Okay, it's right on it actually. 14,611. we've got a 14,701, a 14,791, and it can't go above the 15,087. Again, that would break this part of the count, which is a 1, 2. It doesn't break the entire count. Speaking of breaking, that just reminds me, I wanted to bring this up. Where did this here, I put this out earlier last week. Okay, I had a primary count in black and an alternate bullish count in purple. And what we had was, look at the bullish count, we had this alternate, that's Tesla. My bad. We'll get to that later. Let me find, I thought something was wrong with that. Here it is, where we put out 3 different counts. Our primary count was 1 and 2. Alternate was a series of 1s and 2s, but the bullish count was purple. We needed to move above the 44.65 high. Recognize that? Okay. Excuse me, it's right there. And then a consequent move above the all-time high. But what we didn't need was a break of the 43.05 low. A break of the 43.05 low negates the count, because watch the purple here. This is 1 up, this is 2 down, this is 3 up, this is 4 down. It actually broke when we broke below here, but it also broke below here. So as 2s cannot retrace more than 100% of 1s, this did. The bull count was negated. Okay, so put that to bed. And let's get back. There is our Nasdaq. I don't believe I have a thing on the Nasdaq. I do not. We'll move to the Qs. All right, here's the Qs. This was the top again on the 7th, and we have a 1 down. The 2s are a little different because they've got an expanded flat. Excuse me, an A up, a B down, a C up. B goes below the start of A. C goes above the high of A, okay? Then we had 2 expanded flat, a 3, 4, and a 5. I can count a clean 5 waves here. You can see this 5th wave subdivides 1, 2, 3, 4, 5, okay? So what can we look for as a retracement of that? And let's see here. And by the way, there's a couple different ways to count that. This could also be a series of 1s and 2s, just like the Nasdaq, which is more likely. But I brought this up because I wanted to show you guys 2 different ways to count this decline from the all-time high to Friday's low. Okay, so we've got an ABC up here. It could go higher, okay? If this is a series of 1s and 2s, and we can get this last 5-wave rise here, from there, now you're looking at right at the 382. The previous 4th wave is right here. We've got 361.64 for 382. 363.96 is the 50%, and 366.30 is the 618. Again, for this last 5 waves down, if this is a 2 up of this one, it cannot go above this high here, which is at 373.96. Okay, in all previous declines, the Nasdaq, and that goes for the Qs, have gone farther down, going back to 2000 to 2002, 2007 to 2009, even in the 2020 decline, the Nasdaq falls farther than the other indexes. I think in one of them it was 80, I want to say 89%, and the S&P and the Dow were 54. It was 80-something%. I don't have the exact numbers in front of me now. Okay, I don't think I have a Qs here. So we'll move on to Tesla. Okay, Tesla, we've got, again, most of the stocks topped in January, February, and the markets decided to top in August, September. What does that tell you about what's going on? Okay, we've got a 5-wave decline here. Look at the black. That's intermediate wave A. And then we have an ABC up for B. This is a complicated double or triple 3. I won't bore you guys with the Elliott wave in that. You can see the counts there. It's a WXY with ABCs in between. Okay, that is the main preferred count. We were looking for this thing to go up to 808. That would be ideal, or the double top on A, which it passed. The A high was 780, and this thing is sitting right under 800. I believe it was 799. Yeah, that's where it is, okay? And then I want to show you guys this, because as this B wave goes higher, this projected C wave goes higher also. At one point, when we were in here, it was sitting in the 300s. Now it's going to be something less. Something higher. My apologies. Okay, and there's A down, and there is B up, and where does C equal A? At 431. Okay, that would be the end of that correction, and that would be 5 down, 3 up, 5 down. We'll see how this plays out, but I want to show you guys an alternate bullish count. Okay, I think I have that in the pictures here. Let's find Tesla. There we go, and there's the purple bullish count. Okay, I've mentioned this several times, but I never charted it out. But the bullish count is, this is still this is 5 down, 3 up, and then 5 down. You could count 5 down in here, and that could be the end of the decline right here at the May 19th low. What I didn't like about it is the waves up, this 4 down violated the price territory of 1. The only way that can happen is in leading diagonal triangles, which are the beginnings of moves, or ending diagonal triangles, which are the end of moves. Okay, so this could be the begin, and I've mentioned this before, but I've never charted it. Like I said, this could be the beginning leading diagonal triangle with a 1, 2, 3, 4 overlaps, 1, then a 5. There's 1 up, there's 2 down. This is the bullish case scenario. 3 equals 1 at 826. 3 equals 1.618 at 936. Okay, so what do we need to see? If this is a 1 up and a 2 down, this move here, okay, which ideally goes to 808 in the bearish case, but anyway, it's going to have a decline after it's done. It cannot go below this wave 1 high. This is going to be a wave 1. This is going to be a 2. Where 3 ends, if it is ideally a 3, it'll go to 826. Then the 4 cannot go below 729. But that being said, with this being 786 and it's right under it, this target 786% at 808, and this is at 799. I would venture to say that if it goes past the 786, meaning above 808, it's most likely going to take out this high, and the bull case is going to come to the forefront and be the primary count. Okay, so as long as this becomes a make or break on one end, and the 729 becomes on the other end. Okay, if that 808 holds and it starts to turn down, then we're looking at 437. If it busts through it, then we're looking at 826 and eventually 936. That's a huge difference. At this point, Tesla could go up to 936 or down to 437. Imagine the money that could be made to the upside and the downside from where it is right now. But we have our parameters. That's what's good with Elliott Wave. We know exactly where we're right or wrong to the point, like we showed in the other indexes. The same with Tesla. Okay, we'll watch these key areas. They're in the 700s, okay, or 808 in this case, and 729. We'll see how that plays out. I wanted to show you guys that Tesla bullish count. It's in play. That leading diagonal has to hold, and then 3 has to bust up. Okay, we'll see. Watch that 808. That's going to be important. Okay, that's it on Tesla. I think, yeah, I didn't draw that bearish, but there is, I'm the bullish, but that is the bearish count here, and the bull was in purple. Gold, we haven't looked at gold in a while. Again, this all-time high back here in August, we said this looked corrective, this ABC. Lo and behold, we got the 5 waves up. That was a huge sign that we were right, that our wave count was correct. That held, and then 2 down. Had to hold above this low. Again, wave 2 cannot retrace more than 100%. It came within a point or 2. I think it might have been 3. But you can see here, the 2 low held. Okay, unless or until it goes lower than that, this count is valid. Okay, and it looks like we have 5 more waves to the upside. So we'll go with that 1 up and 2 down, and let's get a Fibonacci extension to get a wave 3 target. Okay, there is 1, and this may not be to the point, but I believe I have a picture that is. Here we go. And 3, this red 3 up here with a circle, here we've got 1 up, 2 down. 3 is equal at 1920, which is basically a double top. It gains a 1.618 at 2066. From there, we'd see a 4 and a 5. Those are not to scale, and a 5 of a larger degree of trend. That's what we're looking at gold. Let's see if we have a picture of that, and we do. There is that 1678 low, the 5 waves up for the 1, the ABC down. You can see here's exact numbers. 1681 could not go below 1678. It didn't. It held. I don't have the individual 5 waves up to make the larger wave 1 mark, but there is 1. There is 2, and it's just a little bit more than a 618 retracement. This 2 which currently the low is 1721, cannot go below the 1681. That's the make or break. Again, the beauty of Elliott Wave. Where are we wrong? Where are we wrong? We're wrong when this move goes below 1681. There's our targets, 1920 and 2068. That is the gold market. Okay, and let's get into the US 10-year. And this is important, and I don't know if many people think it is. Back in the 70s and 80s, when I was growing up, they were important. Interest rates were high. They were in the teens. Thus, we had the end of the 39-year bear market in interest rates at the pandemic low in March. You can see a 1 up, a 2 down, 3 extends or subdivides, and a 1 here, 2, 3, 4. 4 held above the 1. I don't remember exactly what that percentage is. I don't know that it, well, let's just see since we're here. Okay, we'll get the retracement of 3. What did 4 do? Well, of course, it did a perfect 618. No surprise. And we got a 1, 2, 3, 4 forming here. I think we can break that down. Let's get rid of this, remove that. Let's go from this 4th wave low, see where this should go. Okay, we've got a 1 up and a 2 down, and then there's 3 and there's 4. It's still developing. You can see, boy, a lot of that sideways action. Let me see if I got a picture of that US 10-year. There we go, 10-year yield. There we go. And there is the wave 3 target. Okay, 1, 2, and 1, 2, 3, 4. That was the 618. That would be the 3 and the 5. 5 of 3 and 3. That's it. It's a 1.93. And no coincidence, there's the pre-COVID crash high in January. And that should be 20, not 10. My bad. Just saw that. We'll cover it up there. Okay. It was 1.94%. We're going to hit 1.93, and then we're going to correct. Okay. So it's going to play probably right in, interest rates right in with the market. It's going to be really interesting to watch. We'll see what happens. But the most critical thing we're looking at here is right here. This next week, this time frame, we had the 10-1 on a 10-3 turn date. Did that market because it was on a weekend? Or is it going to go even higher here into the 10-6 turn date? Will it just collapse? Or will it violate and break above the 44.65 high, which would just eliminate this 1-2 here? Okay, we covered a lot of things. We'll see what happens during the week. We'll touch base during the week. And until then, take care, everyone.